Hey guys, Whitney here. Welcome to another episode of the Passive Investing Made Simple Bootcamp. I'm going to wait for everybody to file in the room here. Thanks so much for taking time out of your day to join me. We are going to talk about how to track your passive investing portfolio. So while we're waiting for people to join in, I want you to find your Q&A box, not the chat box, your Q&A box, and go over there and drop in where you are joining from. I would love to know, especially, I don't know about you, it is cold here today, so I'm a little bundled up in my office. But go in there and drop in where you're joining from. If this is your first time joining, welcome. I do this boot camp about once a month, sometimes, every like 4, 5, 6 weeks. And this bootcamp is really focused on helping you build a core skill when it comes to passive investing. Okay, figuring out something in your plan. So this is not going to be like our weekly masterclass that we do that is pretty informational. This is really about you learning this core skill, being able to implement it, and by the end of this episode, I want you to feel comfortable with what metrics you need to initially start looking at when you're tracking your passive investing portfolio. So whether you have already invested in an asset or you're looking to invest in your first asset, these are the things that you need to start keeping track of on a spreadsheet. And then how can we set some investing rules in place for ourselves and make good decisions as our deals start cycling out? Now, guys, I have this blocked for an hour and a half. I don't think that we're going to go that long. Okay, we're pretty focused on just this piece of passive investing, but I'm always open to answering questions, guys. I'm going to stay here for the time that we need to in order to get your questions answered. But let me go ahead and share just a brief presentation on what tracking means, what metrics we should be looking at, and then we can dive into some tools that I have prepared for you. So give me just a second, guys. All right. Let's see where we got people joining from. We got California, Boynton Beach, Florida. I am so jealous right now. You said it's warm there in Boynton Beach. I am freezing. It is negative. I think last time I looked at the thermometer, negative 11 right now. Albuquerque, New Mexico, Florida, Conifer, Colorado. Bobby, you know what I'm talking about. It is chilly here. All right. And then we got another guest from Florida. So jealous, guys. All right. Well, let's dive in. So what we're going to tackle today, I'm going to go over the 2 biggest myths that actually keep people fairly sidelined in building their portfolio. We're going to actually learn about those metrics that you need to track, that you need to keep track of for performance, balance, and allocation. And then I'm going to show you a very simple way to track your assets. Okay, there are a myriad of ways you can track your assets. You can go into, I've seen some incredibly detailed spreadsheets and programs. I'm going to show you a very simple way that's very low maintenance and low intimidation. Oh, somebody joined in from Honolulu, Hawaii. Welcome. All right, so 82 degrees and sunny. Jealous. It's sunny here. It's just not 82 degrees. I'll tell you that. I'm joining from Colorado as well. So my counterpart here in Conifer knows exactly what I'm talking about. All right. So what are our 2 biggest myths right now when it comes to passive investing? And this is like what passive investors tell themselves. Well, the first myth is they tell themselves, I don't have any control, so I'm not going to passively invest. Now, if you've joined me for any amount of time on the Passive Investing Made Simple show, you know that's simply not true. We are constantly talking about how to vet operators, markets, and deals. We're talking about goal setting, understanding your investing goals, understanding your risk tolerance. All those things you get to have in your control before you ever write a check and decide to invest in an asset. Today's webinar on how to track your assets is going to help you continue to maintain that control as your portfolio scales and doubles again, right? It's really exciting when those things happen, but we need to keep the eye on the ball and making sure that we still maintain control over our investing goals, where our money is allocated across operators, markets, and deals. I see a couple of people posting in the chat, guys. Help me out. If you can keep all your comments in the Q&A box, that would be fantastic. I can stay very organized there. All right, another myth that investors tell themselves is that they won't make that high of a return. And that's simply not true whenever you're passive investing. And I'm going to show you the one return you need to be tracking across all of your assets, whether you own active real estate, passive real estate, or in stocks, bonds, and mutual funds, because I guarantee 9 times out of 10, when I talk to investors, they are not tracking this return. And that in and of itself can be you understanding actually how much you are making per hour on each investment. All right. So if this is your first time joining one of our boot camps or master classes, welcome. My name is Whitney Elkins Hutton. I'm the Director of Investor Relations, or excuse me, Director of Investor Education here at passiveinvesting.com. I started off real estate investing back in 2002, completely by accident, living, flipping, and house hacking. Bought a house with a significant other. The relationship fell apart, and here I was stuck with a house, and I needed to figure out, oh my gosh, how do I sell this? I can't sell it with the psychedelic daisies painted on the wall and the green shag carpet. So completed the rehab on that property. 11 months later, sold it, and I was bitten by the real estate bug. I had made more in my day job than I had, or excuse me, I had made more in that investment in 11 months than I did in my day job that had me traveling almost 80 hours a week. Fast forward, figured out how to hold on to those properties and generate cash flow so I could break that paycheck dependence and have far more flexibility in my work and my impact that I make in the world. But I still was unsatisfied with how we were scaling our portfolio. It was a lot of work to manage those single family properties. Even though I had property management in place, I was still doing an incredible amount of work. Guys are probably getting a little bit of insight on what return I'm going to have you guys track across your investments, right? So we learned, my husband and I sat down, scratched our heads, and we're like, we need to figure out how to invest in larger scale assets. Okay, but do we do it actively or do we do it passively? And I'll tell you, my friends, we did both. And the assets that actually got us to financial freedom, stabilized passive income, got us to financial freedom, were not our active assets. It was our passive assets. But we needed to figure out how to boost our income because we weren't able to boost it that much in our day jobs, just in the fields we were working in. So we had to do active assets. But many of you here have very solid, high income day jobs. And so passive investing makes complete sense for you to jump into. But I understand some of the obstacles for you to get into passive investing. And that's what these boot camps are here to do, is help you break down those obstacles and either get into your first deal or next deal with confidence. So for my husband and I, we've been able to scale a portfolio of over 6,500 residential units, 2,200 self-storage. We have a myriad of car washes and other assets as well. And like I said, what you probably want to copy here are a repeat, and that's totally fine. Completely copy it. That's what these boot camps are for, is to get 100% choice on how you spend your time. Now, we can actually help you do that here at passiveinvesting.com, invest in these high quality assets. These are just a few of our metrics that we've been able to achieve for our investors on our exits. Be sure to reach out to me at passiveinvestingwithwhitney.com if you want to learn more about that. But I want to make sure we get into our education right now. Anything that I talk to you about today, it's not financial advice, tax advice, legal advice. Okay, so make sure you're consulting with your investing team before you apply this to your own portfolio. And again, if you want to join us on our next deals, we have some open deals right now. Make sure to hit up passiveinvestingwithwhitney.com. You'll get access to a free one-on-one call with me, our Passive Investing Made Simple masterclasses, and additional boot camps like this, and priority access to our deals. All right, guys, so let's jump into how to track your portfolio. Now, I like starting off with, what do things mean? Because so we're all level set on the same page. What does tracking really mean? Well, when you look at the definition of tracking, it's a verb and it means to follow the course or trail of, and it can be someone or something, typically in order to find them or note their location at a various point. So if we apply this to investing, really what we're doing is we're following the trail of our investments, that something, in order to note their location at various points of investing. Now, I think that's very poignant that we understand what tracking your portfolio actually means, because I think a lot of investors, when they get into investing, they think tracking actually means to be able to predict performance or mitigate all risk, which it doesn't. Once you invest in a passive deal, you need to be able to just continue to track performance so you can make educated decisions along the way. So think about it. What kind of tracking do you have on other assets? I want you guys to go in the Q&A box and let me know. Is it that you have an amazing spreadsheet already built out and you just want to get a couple more tips today? Is it that you have no tracking in place and you're just like, thanks, Whitney, I need to know what this actually is? Or do you have some sort of mix in there of tracking? How are you currently tracking your portfolio? Go to the Q&A box and let me know, because I want to have a good understanding where everybody is right now. All right, I see nothing coming in. So I'm going to take a little bit of a gander there that people are saying don't really have much tracking in place. Let's see. Oh, great, some answers coming in. Somebody says they got a balance sheet to track their assets. Fantastic, but they're not tracking their income. I'll give you a little hint on what I do. They've got a spreadsheet. Somebody's only tracking IRR. Okay, what else should you be tracking? Let's talk about that. A lot of us leave tracking kind of up to chance, especially if you're coming from stocks, bonds, and mutual fund world. They're just leaving it to chance. Like, I've got this portal, but what do I do after that? Like, if my cousin actually called me the other day and he's like, I'm about to sit down with my financial advisor in stocks, bonds, and mutual funds. I've only made 8% over the last 5 years total because the things have tanked. And he goes, what should I be tracking? And I'm like, oh, buddy, let's sit down. And we had an hour-and-a-half conversation. I went through all the rigmarole of what he should be tracking to really be able to make good decisions on that portfolio. A lot of people are just tracking income. Fantastic. Oh, we got somebody here that looks at the difference between the projections and actuals. That's awesome as well. All right, so my initial goal with today's presentation is, and my goal with tracking in general am I sticking to my investing goals that I set out to obtain? And do I have the data in place to make informed decisions next? Now, I'm sharing that definition with you because, for those of you who are tracking depreciation and all that, you're not going to see that on today's spreadsheet. It's not saying that it's not something that you shouldn't be tracking, but really for me, what are those data points that I need in order to make my next move and my next decision? All right. So why is this important that we have a tracking process in place, even if it's very simplistic at first? Okay. For me, I'm a big believer that complexity is the enemy of execution. So if you have no or very little tracking in place, okay, don't go big. This is not the time to go big. This is the time to incrementally add to your tracking process. And my challenge to you is maybe every 2 months or once a quarter, you add one more metric to your tracking process. All right. That way, you can build this process over time and it's not overwhelming. It's not too complex. Okay, but why is it important? We need to be able to review the asset performance. Okay, I like calling this the second interview, right? When an asset starts cycling out, do I want to go into a 1031 exchange with this operator, or do I want to liquidate and go into another asset? Well, I need to go back to my tracking sheet and see if that asset, that operator, would interview again for their position to be in my portfolio. I need to be able to manage my asset allocation as my portfolio produces returns. I had 16 exits in multifamily over the past year and a half. All right. I only had one in self-storage. So what do you think happened to the multifamily portion of my portfolio? It largely doubled, right? But my self-storage didn't, right? So you get that asset allocation if you're really managing asset allocation for asset class, you need to be able to modulate that and be able to go forward and make your next investment decision. All right. You need to be able to manage exposure of risk. Okay. And there's 4 areas of concern that we are going to pinpoint today that everybody needs to be managing that risk. Okay. Now, I want to leave you with a little pearly nugget. Most people start tracking after they've made an investment, maybe after their first distribution. You should actually add an asset to your tracking sheet before you ever send in that check. Okay. And I question even before you sign the PPM, just really quick. That's why this process has to be super simple. Why? Because once you add that asset to your sheet, you can see how your numbers and your allocation and your balance moves. And you can go, yep, I'm making the right decision for myself in relation to my goals. All right. That is a little pearly nugget I see hardly nobody do. All right. So as we go through this, if you guys have questions, drop them in the Q&A box. I encourage you at any point in time, drop them in the Q&A box. Those questions that fit in line with what we're going to go over today, I'll do my best to answer in line. Otherwise, like I said, I don't think we're going to be on here the full hour and a half talking about tracking. So I'm going to get through the bulk of the information, and then I can wrap up and kind of clean up the rest of the questions in there. But make sure that you're putting those in the Q&A box. All right, so let's talk about what should go on your tracking spreadsheet. Yes, I am going to share a tool with you today, okay? And show you how I do this, how I think about this, and it'll be very basic. But let's go through what should be on your sheet now. So first of all, add in the basic information for the deal. We need to have the asset name. I also encourage you to put down the LLC name if it's different. Okay, why? Because when those distributions start coming in and hitting your bank account, oftentimes it's under the LLC name, which can be different than the asset name. I know we do that here at passiveinvesting.com. I know a lot of my other operators that I invest with do that as well. So track the asset name and the LLC name. Make your life easy. Okay, put down that asset address, especially if it's a single asset entity or if there's like multiple, maybe 3 or 4, say self-storage buildings in that portfolio. Track down the address if you have it. Okay, I like doing that because you can actually go look up and make sure those places exist. That should be part of your tracking process, part of your underwriting process for the deal. Now, once you have the asset addresses in there, I would add another column to peg in the market. So if you say are investing a lot in the Charlotte area, right? There's different submarkets in the Charlotte area, but you can put the market as Charlotte, or maybe South Carolina. Why? Because you want to spin your data to look at the market as well. Make sure to take note of when the asset closed. All right. For me, I know like once your portfolio starts scaling out, it's those timelines tend to blur. Like, did I close that asset in end of 2020 or the beginning of 2021? Right? That'll help you kind of plan, because if you take note of when the asset closed, and here on the next slide the timeline horizon for the asset, you have your 2 data points to start planning or understanding when your assets are going to exit and plan for the next year. All right. Who is the operator on the deal? Okay, take note of that. All right. What type of asset is it? Okay, is it multifamily? Is it self-storage? Is it car washes? Okay. Put it in a category, and I'm going to show you why you want to put it in a particular category. And again, so you can track your data. Drop in the asset value, right? What was the asset purchased for today? Okay, put that in. Then put in your distribution timeline. Okay, so Is it going to be monthly? When does it start? Is it going to be quarterly? When does the quarterly distribution start? That way you have that all there. Part of this is forcing you to make sure the reason why you want to do this beforehand, it's forcing you to make sure you have all these data points underwritten before you actually fund the deal, right? Somebody dropped in, why post the asset close date as opposed to the day I funded it? Just like I said, because the day you funded it is irrelevant for when it comes to the asset cycling out. The date the asset closed, that starts that kind of timeline horizon clock, so to speak, so you can now plan for your next deal. Okay, that's why that's important. You can add in a column for a date funded, but generally date closed is going to be an indication when your distributions start, when that timeline horizon clock starts for the asset. So very important that you have that in there. Now, if you're investing in funds, so like a multifamily fund or self-storage fund that's open-ended, you're not going to be able to put in some of these data points. All right, so it makes it a little murky to be able to make all the decisions you need to. Okay, but nothing wrong with investing in those things. I'm just saying you won't have all these data points. All right, the next set of metrics we need to check or track here are our returns. All right, I like adding in a column. Okay, how is this asset meeting my goals? Okay, this is my double check before I actually write a check to somebody. Is I have to go in there and say, does it preserve capital? Does it create cash flow? Does it create equity, tax benefits? What are all those goals that I'm looking for? And can I actually type all of those things in that column? All right, this is I might get super excited about a deal. It has amazing returns. It's with an operator I love, but it doesn't hit all my metrics, okay? And that's fine. I'm gonna show you an example here where I sometimes invest in deals that don't hit all those pillars for my goals. And that's fine, but now I'm eyes wide open before I write that check. All right, it's your double check. Okay, you need to take note of your invested capital. How much did you write? Okay, sometimes, that gets a little murky when you get multiple deals under your belt. And we're gonna track at the end, your tenant, when it cycles out, like what capital you got back. Okay, so you need to know, that's super exciting. If you wrote a $50,000 check, and your total capital received across the whole investment was $100,000, that's exciting to see. Take note of the preferred return. Okay, again, this is another double check for me. I'm going in there and I'm like, okay, if I can't actually add in a preferred return, for me, I don't invest in any deals that don't have a preferred return. Okay, so that's again another nice double check for me on my underwriting. Make sure that I did what I said I was going to do. Internal rate of return. These are the going in metrics, right? What on that spreadsheet or on that offering memorandum, what did they say the preferred return was going to be? What did they say, the operators say the IRR was going to be? The equity multiple, the whole timeline, right? Now you can kind of set that big old, offering memorandum aside and you have it on your spreadsheet. So now you can actually answer a lot of these questions for yourself. I also encourage you to keep a column of notes for yourself. If it was a 2 tranche deal with Class A shares and Class B shares, which class did you go into? Okay, again, don't rely on your memory. Okay, make all those notes on your spreadsheet. And the waterfall structure. Okay, if there's anything in there in the waterfall structure. And additional notes on the waterfall would be no GP catch up, has a GP catch up, stuff like that. All right, now it comes down to the math, okay? And I want you to keep this pretty simple on the columns that you need to add, because then I'm going to show you a way to spin all this data that you just put in there on this example sheet that I'm going to show you. But some additional columns you need to add in there is your percent ownership of the asset, okay? Because, and essentially this is really simple. You're going to take the total, your total invested capital divided by the total asset value there, and that's your percent ownership. Now, that's really important, okay, to kind of keep track of that metric, because that will help you make decisions should something actually ever happen to that asset. Heaven forbid they did a capital call. If your ownership percentage, say, is like 5% of the asset, woo, you might want to throw some, meet that capital call in order to maintain your 5% ownership. If your ownership percentage is like 0.05%, I don't know if I throw additional capital in there because your ownership percentage is so low, right? That you need to know that so you can spin that data if you, heaven forbid, you ever had to make that decision. The second computation, super important, is your invested in percent of net worth invested per deal. Okay, so this computation is very simple. You're going to take your $50,000. Let's say you invested $50,000. You're going to divide it by your total net worth. Okay, and that'll give you the percentage of how much that deal makes up of your net worth. Okay, very important there. Yes, we are going to go over that Excel spreadsheet. For those people who are joining live, I'll tell you how to get it here in a second. So hang in there with me, guys. Some added columns to put on your spreadsheet, because some people have their own spreadsheets going already. Some added columns here are to track what happens when the asset exits. Okay, so when an operator is now asking, hey, do you want a 1031 exchange on this asset with us? Here is your expected IRR, expected equity multiple. And this is the timeline of which we're exiting, 27 months, 10 years, right? You can drop in those exit numbers. And then now you can compare what they said they were going to do at the beginning and what they're actually delivering. Okay. And now you've got that second interview data. Do I actually want to do a 1031 exchange? Like, did they meet and exceed the IRR? Did they meet and exceed the equity multiple? Now, guys, I want to give you a little piece of advice here. If an operator exits early, you want to see that IRR go up and the equity multiple is actually going to go down. Why? Because they weren't in the deal as long. Okay. So that IRR becomes super important here. Okay. Now, that's all the metrics, all the data that should go in that spreadsheet. I know it seems overwhelming, but guys, I'm going to make this super simple for you. I'm going to show you how I do it. But what we want to actually do with all this data is track 4 different areas. Okay, these are your 4 areas of control. Your asset class exposure. All right. And for me, I don't put a whole lot of weight into this. Before people started asking me, how much do you put in multifamily, self-storage, car washes, hotels? I have some guiding principles, but it's the next slide when we talk about the rules. Those are my hard, fast, sticky points. Okay. I don't have really a good metric for asset class allocation. I do have some sticky rules when it comes to operator allocation, market allocation, and deal allocation, okay? Because those are some other exposure areas that I'm far more interested in, okay? Now, all of this is gonna help you create these rules, okay, for yourself. Again, how much are you comfortable with in investing in multifamily, self-storage, car washes? How much are you investing exposure of your overall portfolio? Are you comfortable with that operator in that market, in that deal? Okay. Now here's the trick. I'm going to show you examples of rules that I follow. Okay. Or actually, I just put in some examples of some rules. Do not use other people's rules. You have to come up with these rules for yourself. Okay. Because people have different investment goals. Okay, so if I just take somebody else's rules off their screen, I'm great, I'm going to use those rules. They might have an entirely different goal than I do. They might have an entirely different risk tolerance than I do. And conversely, be really careful when you share your rules with others to kind of make that disclaimer, right? Hey, these are my investing goal criteria. This is my risk tolerance. This is my time horizon. If this matches what you want, what you want to see from your portfolio, fantastic, copy my rules and not amend them. Okay. So let's dive in to the actual spreadsheet. really quickly. I'm going to show you how these things spin against each other. Oop. All right. Sorry, guys. And again, I made this really initially very simple. You can get extremely complex on tracking, but I wanted to show you just the simplified way of doing this. And again, I actually enter data into a spreadsheet before I actually make the investment, because I want to see how that investment affects the balance in my portfolio. So I would take at the very top right here, I'm going to walk you through this. If you guys see, I'm in A1, my portfolio goals. I would have your goals immediately written at the very top. That way, every time that you are entering something in here, if you've got those goals right in front of you. It's kind of like putting that sticky note on your mirror. Okay, so for me, I like doing capital preservation, cash flow, equity growth, and then tax benefits. Okay, those are my goals. Okay, that's what I want to see from my portfolio. Now, again, I put a little disclaimer, this is an example of how to set your own sheet up. Okay, make sure that you're making the sheet your own. Okay, so in order for everything to computate, you need to know what your net worth is. Okay, I go over to the Q&A box. I would love for people to know, I'm not going to ask you what your net worth is, but I want everybody still on this webinar to share with me, can you tell me today, yes or no, that right now you know what your net worth is today, right now? Because if you can't, I'm going to share with you a tool in order to know that. Go to your Q&A box. Yes, yes, doubtful. Yes, 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 yes to the penny. Woo, I love that. Yes, yes, yes on net worth. Fantastic. Doubtful. Okay, we got a couple doubtfuls and a no. Okay, that's fine. That's what I wanted to know. Because one way to kind of simply track your net worth is there's a tool out there called personalcapital.com, and you can pull in all of your assets, all of your accounts. Okay, they have bank level encryption, and you can track your net worth. You can do it on a spreadsheet. I like using electronic tools because it will constantly aggregate my account in order to understand that net worth. Now, you might be scratching your head. How on earth can it pull in data on my passive assets, like private equity deals? It can't. But you can add those in manually. In just one-time lift, add them in manually. And then you can also kind of monitor your portfolio for growth performance as well there. So that's a really cool tool. Another tool out there that you can use is mint.com. It's a little bit more, and that's a free tool. The paid tools, QuickBooks, but that's another way that you could, monitor your net worth. But it's super important that you have a great understanding of your net worth, or a good way to get fairly close on what your net worth is. Because if you can't nail your net worth at, within reason at any one point in time, this is going to make it extremely difficult to track your portfolio. So those are three great tools. Spreadsheet. Okay, if you're good with manual setup. Number two, my favorite, personalcapital.com. Okay, especially if you still have a retirement account like a 401k, IRAs. There's some great retirement fee analyzers in there. Third tool, mint.com. There are others out there for sure. All right. Okay, so we talked about that, okay? And like I said, this is all predicated that you know what your net worth is. Otherwise, you're not going to know what your exposure is in your portfolio. All right, give me a second. I'm clear the Q&A box really fast. Oh, thank you, Abe. Abe, yes, Personal Capital did rebrand to Empower. I just saw that email last week. I wonder, I'm sure there's a story behind that. But yes, has been rebranded to Empower. I still think you can get there if you type in personal capital. All right. Okay. So here we got our columns. We got, I just dropped in some dummy deals, multifamily. But I wanted to show you like this multifamily fund. Where is it? I don't know, various places. Okay. But maybe the thesis that it's all in the South Carolina and North Carolina area. So I can give it a market name. And here I just called it market 1 so I could show you how the spreadsheet calculates. I tracked when it closed, what type of asset it is, multifamily. I put in who the operator was. Now, guys, remember, I said there was one metric that I pretty much guarantee nobody's tracking, and that is their time. Okay, now for me, I just track active and passive with my assets. If you want to get more nuance, I would actually track, especially if you have a lot of active deals, like a lot of single family, small multifamily, STRs, midterm rentals, a business that you run that you're going to put on the spreadsheet to track how much time it takes for you to run that business or get into that asset, because that's your commitment level. And if you track your time, this is one of the number one obstacles I hit with investors. They're like, I can make more money in single family investing than I can in passive investing. And I argue with them. And every time I have them track their time commitment on their deals, passive deals crush the time they make per hour. Okay, so always track your time, your return on your time. Okay, I'm going to put in the unit count here. Let's say this is 1,000 units. How much you're controlling, what's the current asset value, how much you invested. Now, I highlighted here this in orange. Okay, my portfolio goals, what part of my net worth, I need to understand how much of my net worth is invested in that goal or in that deal. Right, that helps me understand that exposure. I've got my percent ownership in that deal. Okay. So, my percent ownership might be high in really one deal or a couple of deals, and might be low in others. All right. I want to understand that. My goals, are my goals met? There we go. Let me get rid of that box. And again, when I fill up this column, I make sure that it matches my portfolio goals over here that I want to see. Okay. And if it doesn't, I'm eyes wide open before I ever write that check. Okay. And am I okay with that? Right. As you can see here, I can check majority of these columns that they meet all my goals, but some of these columns don't. All right. And that's fine. Okay. But you just need to be eyes wide open. I see a lot of times that investors start chasing yield and cash flow, and they forget about the other pillars that can actually support their wealth build, which is, equity build, tax benefits, good use of leverage, capital, assets that are backed by a hard asset that can be controlled. They forget about those things. Okay. They kind of like escape out of their mind because they're chasing yield. Okay. Make sure that you have your goals right in front of you. Whole timeline. Okay. Is that within the timeline? Again, this is part of your goals. Is that deal in that timeline that you want to be in? Okay, now most people underwrite their deals to 5 years and have the option to sell early. But I've seen some, funds out here lately, they're in perpetuity funds. Okay, they sound really attractive, but I don't know when I'm getting my money back. All right, it's all hypothetical. All right, so you want to understand, is that deal, okay, the timeline in that deal, does that actually meet your goals as well? I always add in a column of like, how am I holding title to this? Now, the reason why I want to, and I didn't put in the title of my assets, but I want to, kind of notate that, is because as you get deals built out, you're gonna kind of wonder, like, where is that deal in my portfolio, right? So if you can see here, I've got a deal that's potentially very high tax. Let's pick one here, like this throws off high taxes, but if it were my IRA, that might not be the most efficient way for me to invest. So again, I want to double check that and track it right now before I write that check. You take which shares are held, or do you have the Class A shares, Class B? Okay, which shares do you hold in that asset? What's the profit on that asset? Distribution schedule. We've got our entry, IRR, exit, entry equity multiple, entry IRR, or excuse me, exit IRR, exit equity multiple, and then my notes column. Now, that's just the spreadsheet. Really quick, each of those line items, that might take me 60 seconds to fill out that whole line. Not long at all. But you want to have a simple process to be able to spin all that data. So the reason why I do this and I categorize things is so I can go down here and do a category analysis. And for those of you here live, if you want a copy of the spreadsheet, email me at whitney@passiveinvesting.com. At the end of next week, everybody that's emailed me, I will just send you out one big bulk email, and you can utilize the sheet. If you have already emailed me for the operator, market, or deal underwriting spreadsheet, guess what? That tab is now there for you. You don't need to email me. You can just open up that spreadsheet, download it again. Okay, fantastic. So again, I'm going down here and I'm looking at the data. Right now, I can start seeing my exposure across multifamily, self-storage. If I'm in ATMs, I just threw in some random things in here. I can start seeing how much do I have invested in each one of those areas, which is great, but that's not the number. I want to understand what percentage of my portfolio that makes up. Why? And this is why you want to do it before you write the check. Start tracking before you write the check, is because am I violating a rule, one of my investing rules to get into that deal? Okay, you want to know that up front, right? I can do the same thing by operator, okay? Knowing how many units I have by operator, how much I have invested by operator, how much I control by operator, awesome, fantastic. But again, how much of my portfolio is weighted to that operator? Now, one thing that I really encourage, especially if you're investing at passiveinvesting.com, I encourage you to break out our different operators, right? Because we have a managing partner, two managing partners for our self-storage. We have a managing partner for our car washes, managing partner for our real estate debt. So we have multiple managing partners. So I would even, when you're investing with larger private equity firms that actually organize as a true private equity firm, I would break those out, maybe like passive investing self-storage operator, right? So you get a bit of understanding. You can see how you can get that diversification in those larger private equity groups pretty readily. And then market, okay, what is my market share, okay? Again, these are the three things that I can really control, four things. How much my net worth is exposed, or let me go through them. How am I exposed by asset class? Like for me, I don't give a whole lot of weight here. How much am I exposed by operator, market, and then my net worth by deal, okay? Because those are things that I can really control, all right? So all of that comes to the end here when we're putting this into practice for tracking our portfolio, is I would love for you guys to sit down and come up with some rules for yourself as you build the spreadsheet for yourself, okay? Use that little question, what will allow me to sleep well at night, okay? Those are your rules, and your rules will change as your portfolio grows, okay? But when you're starting out, for me, I just put in kind of a random rule here, no more than 10 to 15% of my portfolio with any one operator, okay? Now, again, like if you're invested with a private equity firm that is truly tiered out with different managing partners managing those verticals, I would evaluate each of those verticals separately, okay? That's just me. How much is you're exposed by deal, right? I've seen investors take everything in their IRA account, invest in one deal. That is an immense amount of exposure in one deal, okay? What happens if that deal, doesn't perform, right? It does happen, okay? Unfortunately, it does happen, okay? Markets, what's your exposure by market? And I like keeping track of that, especially, if you're investing in markets, like coastal markets, inland coastal markets that might be subject to a high amount of flooding. Heck, I never even thought in a million years. I had a heavy amount of my portfolio in the Dallas-Fort Worth area. And we had the power grid go down. That was a lot of exposure. Fortunately, I was with, those assets are with an amazing operator. They did an amazing job. I heard horror stories of people who were not with amazing operators and really struggled. So understand your exposure by market, okay? That also plays into exposure risk, but also diversification. And then asset class. For me, I put this down here. And again, these are not my rules. I just threw an example of rules. You need to come up with these numbers for yourself. And really, again, that question I always go back to is what will allow you to sleep well at night? Okay. And nobody likes losing 10% of their portfolio, but like if 10% of your portfolio, if you turned on the news and there was a risk in your portfolio that affected 10% of it, would you still be able to sleep well at night? Most people can sleep like a baby still, with 10% exposed, okay? They might be a little nervous. They're gonna be asking questions. Absolutely, you should, but understand what these rules are for yourself. All right, guys. Let's see, we got a couple questions here. Yeah, oh, thank you. Got some kudos with the Excel spreadsheet. Amazing. I'm just about to do the same thing. You saved me a few hours of figuring it out. You're very welcome. Again, if you want access to this and you're here live, email me at whitney@passiveinvesting.com. I'm going to aggregate all those emails, send out one big one next week. If you already have emailed me access to the spreadsheet, for underwriting, operator, market, and deal, you have access to this tab right now. Don't send me an email. You have it. You can open it. You can re-download it. All right. Somebody asked, what was the control number? Let's go back right up here. So the control number, you can look at I think I'm going to answer this in two ways. Okay, so make sure I cover my tracks here. So this is the actual value of the asset. Maybe we'll just do value of asset. Okay. So in your ownership percentage. Okay, because I've had a couple questions in the Q&A. Hey man, we can change this on the fly. So the value of the asset that you're investing in, like if you're buying a multifamily building, is it 40, this particular multifamily fund, let's say it's going to be a $50 million fund. That's not a good one. But here's one that's $31 million. Okay, that is the value of the asset you're investing in. All right. Oh, somebody said much cleaner than mine. I'll email you. Yeah, please do. Let's see. Next question. So when you list the net worth of $1 million, does that mean to reflect the cash you're investing or the total net worth of your assets owned? That is my total net worth. Now, that's not mine, okay? I'm just saying that's the number you're going to put in here, your total net worth, okay? That's why I asked the question, do you know at any given time what your net worth is? Okay, so this spreadsheet is only as powerful as you can answer that question. That's why I love engaging in tools that can help me get at that. Now, I want to make sure that those tools have bank level encryption. And so the two that if you can't keep your own spreadsheet up to date, which is hard, eventually I wish for everybody here to scale their passive assets to where their CPAs get totally mad at them because they're sending them so many K1s. Okay, high five. That's what I want for everybody here. Okay, those also tracking your net worth on that spreadsheet can get really wieldy. That's why I love electronic tools to help you manage that. Okay, but however you want to do that, if you want to, I actually have my spreadsheet that's built like this in my, this cell actually references back to my net worth calculation in my spreadsheet. So as I only have to keep that one spreadsheet up to date, it automatically populates this column. That's how I do it, or populates that cell. Okay, but I want to know my total net worth, not just like the percentage cash. That doesn't really tell me anything. Like how much of my estate, my net worth of my estate is exposed in any one Asset class, operator, market, and deal. That's what I want to know. Value of the asset does not include any additional fund for rehab, upgrades, etc. I know. I thank you for asking that question, and that's a great point of clarification, because that's the entrance value of the asset. That's like what the think of it, put it in the appraisal price. Okay, so that is the value that if you close today and sold tomorrow, that's probably what you're going to get for that asset. That's what I want to know right now. Okay. Again, this is about not making this initial process complicated. Okay. Don't make it complicated. Complication is the enemy, complexity is the enemy of execution here. All right. Okay. So guys, that's what I have for you. I'm just going to pop up one last invitation. If you haven't, go here. So we talked about everything. We talked about our rules. I showed you everything is in place. Again, make sure to craft your rules for yourself. Guys, that is what I have for you today. I thank you so much for taking the time to be here and spend it with me. I always love spending time with you guys, but also invest in yourself, okay? Invest in your skills that are going to allow you to be a more confident and professional passive investor, because I wish nothing more for all of you to reap the amazing freedom that comes with being a knowledgeable, professional, hopefully passive investor. Guys, thank you so much. Here's your invitation. Be sure to reach out to me. If you have more questions, feel free to stay on. We'll do some additional Q&A.